Hi everyone, today we're talking about the classified balance sheet, and I'm your instructor Brandy. Up to this point, you've learned how to make a simple balance sheet. Today we're taking it one step farther. All that the classified word means in classified balance sheet is that we're adding categories into our balance sheet. Our balance sheet is proving the accounting equation, assets equals liabilities plus owner's equity. So now when we're categorizing these, we're giving categories to assets and liabilities. So under assets, we are now going to have a category called current assets. And current assets are things that we can convert to cash, or we're going to use up or sell within the next year, within the next 12 months. We're also going to have a subtotal for our current assets. And then we're going to move on to property, plant, and equipment. This category is sometimes called fixed assets. And it would be comprised of things like your land, your building, your furniture, your office equipment, things like that. Other categories of assets that are long-term in nature are long-term investments, so investments that you plan to hold for more than 12 months, and everything else goes in other assets. Each of these would have a subtotal, and then we would end our assets, of course, with our total assets. On the liability side, we're going to have a category called current liabilities. And these are things that we need to pay off within 12 months. Then we're going to have a subtotal for our current liabilities, and everything else is going to go into a category called long-term liabilities. And some companies call this non-current liabilities. You're going to end with, of course, total liabilities. And your owner's equity section is going to look the exact same as it did before. You're going to put your capital amount from the statement of owner's equity into the owner's equity section, and we're going to end this section off with total liabilities and owner's equity. To take this a step further in how you're going to classify your accounts within the balance sheet, for our asset side, we're going to list our account in what can be turned into cash the quickest or what will be sold the quickest. So obviously cash will always go first because cash is cash, doesn't need to be turned into cash. Then usually we put accounts receivable because we expect to turn accounts receivable into cash within 30 or 60 days. After that, we go into assets like prepaid expenses, inventory, if there is inventory, and assets like that. We do something similar for liabilities, and that is we list our liabilities in terms of what has to be paid off the quickest. So generally, accounts payable has to be paid off within 30 or 60 days, so we list that first. Then generally, salaries payable, notes payable, and then going into the long-term things like mortgages, long-term notes payable, things like that. So whatever has to be paid off the quickest goes at the top. So let's look at an example. Okay, so I've outlined a regular balance sheet, which we've learnt about to this point, and now what we're going to do is go through and make it a classified balance sheet. So I'm going to use a different color here just so it's very prominent, the extra things that we are doing to this balance sheet to make it a classified balance sheet. Okay, so let's start on the asset side, and what we're going to add in is we're going to add in a current asset category. And then we've indented all the current assets just slightly from the current asset category heading. And then we're also going to put in a total for those current assets. For non-current assets or for long-term assets, it looks like I have things that are tangible and fixed asset in nature, so computer equipment and land. So I'm going to call this category property, plant, and equipment. And my computer equipment and my land both belong in that category, and we're going to add in a total for total property, plant, and equipment. And now the total of our current assets plus our total property, plant, and equipment should equal our total assets altogether. And if it doesn't, that means we've done something wrong. Now going over to the liability side, we're going to do the same thing. We've got current liabilities, and we're indenting our accounts payable, our salaries payable, and our unearned revenue. And we're going to do a total for current liabilities. I'm then going to add in a category for long-term liabilities. And since we only have one long-term liability, it's not really necessary to do a subtotal, but if you had more than one, if you had another mortgage or some unearned revenue that was expected to be fulfilled in more than 1 year, you could put a subtotal in there. And my total liabilities is the total of current liabilities plus long-term liabilities, and that still works, so we're happy. And going down to the owner's equity section, we actually don't have to do anything different. Nothing changes in this section. So really, when you're being asked to do a classified balance sheet, it's really just asking you for some titles and for some subtotals. So it's nothing scary, just a few more words. So now you should feel comfortable preparing a classified balance sheet. Thanks for watching, everyone.